welcome. You're watching Business Today TV. I am Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. We'll also spot some opportunities for you. We'll discuss with the experts as to where are opportunities emerging for investors in this current market and where can you book returns as well. We'll also get you all the latest from the Q4 earnings as well and the strategies that experts are recommending on those companies and stocks. But first up, a quick check on how the markets are doing at this point in time. Well, it turned out to be a great Friday so far. We did see the markets inching higher, and even now as we speak, the markets are looking at performing at the day's high level, 18,506 now for the Nifty, and the Sensex is hovering near 62,513. That's up by 645 points, 1% uptake for both the benchmark indices. A very, very strong session coming about. We're also seeing good gains coming through as far as the broader markets are concerned. The mid and the small cap 100 indices both are inching higher again towards the day's high, 0.8% of an upside for the mid cap 100 indices. That's doing better of the broader markets. In terms of the other sectoral indices as well, all the sectors of the Nifty, barring slight losses that are coming about in the realty pack perhaps, rest of the sectors are all up in the green. Look at the Nifty Bank, for example. It's up at the day's high, 0.8% of an upside can be seen for this one. The FMCG space has also seen gaining strength, 1.5% uptick for this one. IT also similar gains, 1.5% uptick at day's high level again. The autos are also inching higher to the faster lane, 0.8% of a move on the upside. We're also seeing some of the other sectors like PSU banks gaining strength. The consumer sector also gaining some strength in today's trading action. The India VIX is down by 4.75%. So the volatility is out of the window as we speak as well. In fact, now I'm also looking at how the realty pack is also turned positive, and in fact it's now up by 1% as well. So gains coming through on all of the sectors. Metals are up, media is up by 2.5% odd as well. Healthcare up by almost 1%, oil and gas up by half odd percent. We're also seeing gains coming on the auto pack as well. Most of the sectors, in fact, all of them have actually turned positive. Let's look at the top gainers as far as the Nifty is concerned. Reliance Industries, clearly the top gainer today, 2.7% uptick for this one. Hindalco, Divis Laboratories, both up by 2.3% odd. We're also seeing gains coming in on Sun Pharma, HCL Tech, HUL. So different stocks from various sectors that are actually showing strength today. On the flop side, when we actually see some of the stocks that are still dragging in an otherwise brighter market, ONGC is the one that's seen as a top loser today in trade, 1.5% downtick for this one. Bharti Airtel, Grasim, some of the other laggards that are down by half odd percent. But let's welcome our guest on the show. Mr. Vineet Bullinchkar joins in. He's the head of research for Ventura Securities. Welcome, Mr. Bullinchkar, and thank you so much for taking the time out for this discussion. Well, looks like a very, very smart move on the upside and a recovery from the last 2 days of lackluster move that we've been witnessing on the markets. Your own sense on what's pushing the sentiments higher, and is this kind of a rally here to sustain? Are the bulls back and are they here to stay?
So a couple of things that have happened is that, there was a lot of uncertainty on the debt situation. But as I read some of the tweets by the market experts out there, what I realize is that, even if they don't materialize the deadlock, the Fed still has substantial avenues to raise contingency funds, which can take their liquidity situation being comfortable at least till 9th of July. And if they can pull on till 15th of July, then we can June, then it would very simply mean that they can extend it till the 1st of July also, because the advanced tax collections will come. So all in all, situation not that moribund as it was being shown to be. This has been played out in our markets. We have seen some very handsome rally happen, and we've taken out the 18,400 psychological level. Now we'll definitely be testing 18,600, 18,700 on the upside. And it is my view that if we break 4,200 on the S&P in the US markets, then we are again into a blue sky scenario where we'll be seeing a quick 10% run on the indices. So I believe that Indian markets can perform better than that because of obvious reasons, that we are of a high growth GDP now among the top 20, acknowledged everywhere. And the growth momentum also is playing out, not remaining simply a promise. So all this portends very well for the large cap Nifty stocks. And if you see the large cap Nifty and the small cap stocks are ones where the valuation catch up is yet to happen compared to the mid cap, the next Nifty and the other mid cap stocks.
Okay, let's actually focus on some of the individual stocks that are moving in trade on the back of the earnings that have come about. Let's look at InfoEdge, for example. Naukri stock as well in today's trading action. The company has reported its earnings where the loss has narrowed to 273 crores. The revenues have actually shown a jump of 28%. Remember the last year, same quarter, we had seen the company post a loss of 628 crore rupees. Although on a sequential basis, the net loss has widened, but on a year-on-year basis, it has definitely narrowed for sure. How do you look at InfoEdge as a stock? We've seen over the last many years. In fact, this has been one of the pioneering, near tech stocks that had been listed in the stock markets way before we defined, these pack of new age tech stocks as the new age tech stocks. But your own sense on InfoEdge?
So I believe that the employment trajectory is very strong, failing for the IT packs. But overall, I think it has got enough avenues of growth, and with the economy firing on all cylinders, I expect this trend to play out. And the Q4 numbers, on the revenue side, are a revelation that things are only expected to get better.
Okay, would you have any targets in mind for InfoEdge and for investors there?
No, we don't cover it very actively, so I would not want to venture out there.
Okay. Okay, what about this auto major M&M? It's been a great performer this year so far in the auto space. It has definitely outperformed. Here, the company's Q4 results have come in where the company has reported a 22% rise on the profit, which is on a year-on-year basis to 1549 crore rupees. Even though it has missed the estimates on some of the aspects, despite the revenues jumping 31% odd or so. But your own sense on M&M, is there still steam left despite the kind of move that we've already witnessed on the stock? It's reacted positively, it's up by 0.4%, but not a remarkable job right there because it has missed estimates on some levels. M&M, how do you see as a stock from the auto
We
basket?
see it more of a market performer playing out here. Volume growth is strong in the CVs as well as in the PV segment. Farm sector is doing very well. We're going to see a lot of up moves happening even on the EV space. But overall, we think that Maruti, Suzuki, Tata Motors, and Eicher Motors offer better bang for the buck, in terms of return expectations than M&M as such.
Okay. What about the auto ancillary pack? Samvardhana Motherson has reported its Q4 earnings today, and the profit has jumped about 436% on a year-on-year basis to 654 crore rupees. The company has also posted highest ever revenue growth, and also at 22,477 crore rupees. How do you look at this stock? Of course, most part of the revenue is also coming from beyond the boundaries as well. It has a lot of international exposure. At these current levels, what do you think of Samvardhan Motherson?
No, definitely a great stock to look at now because the it's a good play on the EV global growth story. But more than Motherson, we prefer the stock of Minda. We believe that that company has got a very very good breakup of domestic as well as international business. It is as diversified as Motherson Sumi or maybe better, and it has got uh, it is agnostic to being a ICE or a EV vehicle, and we believe that the best part of the growth journey is about to come because earlier the company was focused on growing horizontally and building technical know-how and skills, but now I believe that the focus is going to be on the revenue growth, and we expect the strong growth to continue going forward, and so we prefer Minda to Motherson.
Okay, got that as well. But let's talk about the top gainer today. Reliance Industries, the biggest listed stock on the exchanges. It's trading at over 2,500 levels as well. In fact, the stock has seen about 2.5% move in today's trading session, 2.7% uptick right now. In fact, we've also seen a report which says that RIL is best positioned to lead India's e-commerce space as well, and that has perhaps led to this fresh bout of movement on the top as far as RIL is concerned as well. Of course, we've been seeing a whole lot of announcements from the company's foray into retail, in FMCG, a lot of acquisitions happening from a lot of small brands as well. from cola space to chocolate space. We've been seeing a lot of action coming about. And of course, we've been also thinking about how going forward from here the demerger can take place and what a value unlocking can happen from there. But at 2506 levels, would you still advise investors to really buy into the stock for the long term?
So, I really think that there are a lot of legs for growth. It's not tired as yet. And, we can still see another 100, points up move on the stock in the short run. Having
Okay.
said that, on the long term, if you see, it has from 2019 onwards, it has grown its market share in retail from 1.5 to 3%. Its profitability is in on par with its competitors. And if you just compare Alibaba in the US, in the Chinese market,
Yeah.
they have a 15 to 18% market share.
Yeah.
So there is significant growth to be had. And if you see the entire retail segment in India, it's a 10 lakh crore market with the opportunity to double from here in the next decade. So we are talking of 11% growth, and it is only about 10 to 12% organized. So huge room for growth for everybody. And what RIL has been doing, when you talk about buying out different brands, FMCG and all, it is all the white spots that were there in its portfolio, it is beefing them up rather than growing them organically by buying out brands which are available for a song at this current point in time. So I think the retail story is shaping up very well. We are going to have something on the digital side, e-commerce, as well as on geo being carved out into separate listed entities. So there are a lot of growth levers that are there. O2C is also coming back. Refining is doing well. So we believe that the company is on a very strong wicket, throwing out a lot of cash flows, and they are just having a problem with where to deploy that cash. And it's a good thing to be in such a situation. So I
All
believe that
right.
Reliance will do very well going ahead.
Okay, so 150 to 150 rupees upside from in the short term, but in the long term, where do you see the targets of RIL then?
I think just keep it in your portfolio, will keep compounding your money over the next 5 years.
Okay, understood that. Interestingly, Vineet, it's also the 9 years of Modi government today, and in the last 9 years, the D Street investors have really enjoyed being in the markets because no complaints there. Investors have got richer by 20 lakh crore rupees. The Nifty has jumped twofold as well. We've also seen the market cap really triple as far as the markets are concerned. Most of the sectors have given positive returns. Most of the Nifty stocks have actually given positive returns. About 48 stocks have given positive returns in the last 9 years or so. What does it really indicate, your own sense of, what follows next for the markets?
So, I will take you back a couple of decades, when the Modi government, not the Modi government, when the BJP NDA lost power to the Congress, the best time of the market came in 2004 to 2009, right? Till the 2008 global financial crisis. So the launch pad which the Modi government has created in terms of the infrastructure spend, optimizing of expenditure, digitizing the economy, and so much work has gone in that the spillover and the real reaping of the benefit is going to happen over the next 5 to 7 years, right? So I believe that even if the Modi government were not to come back, which is a very slim chance, 1%. Okay, even then, I believe that the growth story of the market is going to be intact, and the engines for growth have already been fired. So I believe that we are headed for a quickening of the economy. In fact, by FY25, we are expecting the major capex run to be completed, and after that, our economy is going to grow at nothing less than 0.75 to $1 trillion every year for the next 20 years. Given the fact that we have such a big uh, growth dividend behind us in terms of the demography, and we are going to be a consuming economy, and we will be peaking in consumption only around 2050 at that. So we are going to see some very stellar growth coming in from our economy, and that is going to play out in the markets as well.
Okay, well, thank you so much, Vineet, for being with us on the show. Always a pleasure having you with us and getting all the insights about markets and what follows next for the investors going forward from here. Clearly, a great Friday to end this week with 635 points of a gain on the Sensex, 62,504. The Nifty also, higher by 180 odd points, a percent higher, 18,500 to the current levels, just a few percent away from the all-time high levels. How soon do we see those levels is the big question right now, but we'll keep an eye on how the markets will continue to move and where are the opportunities emerging for investors. And until then, you should stick with us on Business Today TV to catch all the updates from the world of business and stock markets. So don't forget to subscribe to this channel and also continue to engage with us on our other social media platforms. That's Facebook, Twitter, LinkedIn, and also Instagram. Until then, thanks for tuning in.
Hello and welcome to Business Today Television. I'm Siddharth Zarabi, and with me at the Goa Fest is Priyanka Gill, co-founder Good Gam Go. Welcome, Priyanka. And the backdrop for our conversation really is this big gathering of the ad world. Before I get into sort of more specific things, what are you picking up in terms of how the latest trends as far as media and advertising are concerned here from Goa Fest, Priyanka?
It's very, firstly, thank you for having me. Goa Fest is exuberant. There's a lot of activity happening. There are a ton of people here. So I think the mood in the industry seems quite upbeat. And I think looking at the volume of activity I've witnessed